Well, good evening, all. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for Monday, Columbus Day, October 14th, 2024. I apologize for not putting out my evening update or even this morning's a morning flash video. I have terrible allergies. I've had them all my life. I used to inject, do things. You get older, it goes away, it comes back. Just terrible. And I couldn't talk for 2 minutes, let alone do a 5 to 7 minute video. It wouldn't have worked at all. And I didn't feel like doing hours of editing on it and everything else, so I just let it go. But I'm wearing my turtleneck for a reason. We're getting cold in Chicago. Some of the suburbs getting down to freezing. The city might hit freezing at nighttime, and that would be ideal. That will get the plants turning, the pollen stop coming out, and I'll get to be a normal human being again. The leaves are not falling yet in Chicago. They're not even turning colors in the parts of the city that I'm in. So we're still a bit away from it, but this cold snap will do the job, I hope. By the way, if you don't live here, you want to come here this time of the year. This is the sneak time. You still have all the outdoor cafes. They've got heaters and all going. The people are vibrant. The tourists are gone in large part. But all the tourist attractions are open, and it's fabulous to see. All right, in the markets, new all-time highs in Nvidia. What can I tell you? All right, up and away it goes, 138.07. Now, Amazon started off strong and finished it on its butt. Netflix did the same. Bonds and notes, you're still adding yield in the market. So what's going on here? Ever since we had the last FOMC meeting, if you go look at your charts and you look at what happened then, they cut 50 basis points, and ever since then, literally, the market has just kept adding yield back as the market is going the wrong way on yields. So something's happening here that is out of kilter. I mean, you cut interest rates and yet the rate yields actually go up, in some cases, 1/3 of a point already. So that's rather important and something to take notice of. On the energies, since I've been gone, Israel has done nothing to Iran, and suddenly the Biden administration last week said they're washing their hands. They're not sending Anthony Blinken out there to try to negotiate anything. It can't be done. All the parties at this point don't want it. And then over the weekend we hear there's a THAAD system, one of our top missile systems, being sent to Israel, and 100 American soldiers are going to be working it inside of Israel. Okay, so that got me thinking. The U.S. doesn't want to go to war with Iran at this point. So what is going on here? I think it's to protect Israel, because Israel's probably going to attack fairly soon Iran, and the idea is to keep the missiles from getting through, but there's probably something that the U.S. wants for that. And I think if you look at energy prices, they're tumbling. It could be that the U.S. has somehow influenced Israel to not attack the nuclear centers, to not attack the oil facilities, to drive oil prices up right in front of the presidential election. I mean, there's logic to that. But it's a go-ahead if you want to take out military infrastructures, areas where missiles can be launched from, other types of military targets. Do I know what I'm talking about? I'm guessing. I admit that. I've read different things in many articles over the past 4 days since you haven't seen me, and that seems to be a growing philosophy. It's also a reason when you add China. Now, you got to go back. China gave us no information, and Saturday they were going to have a big event, which they had, and again, they gave no information. Where's the details? So in the U.S., copper gets hit, the silver gets hit, but the gold market stayed up. Gold's starting to get its bid again, even with the strong U.S. dollar. Now ask yourself, who's bullish and who's bearish for the dollar? The trade seems to think a Trump administration is bullish the dollar and a Harris administration would be bearish the dollar. Except that is roundabout figures. That seems to be what the markets are talking about. I'm not changing K-Web. I'll continue with it for a little bit here, and the reason is I didn't get a chance to finish it up with you because of my allergies where I couldn't put out updates. If I'm right, this market, as you can see, is trying to come down. You still have an island top here. The way it gets filled is when and if China announces a plan with figures behind it that the world buys into, and that makes the markets run. We don't have that in the marketplace. The money is telling you that you don't have that right now. When you look at the pattern, it's lower highs, lower lows. It's back into a bear pattern. I thought it would go back to the 18-day average last week, and 33.50 is that number. You're 50 cents away now, so I think that's where it's going to go to regroup, if you will. When we take a look at Bollinger Bands, you were running them like a son of a gun because the market got over-exuberant. It came from this level of 25, got itself up all the way up here, let's call it the 39 level, and you're giving back about a third of that right now. That's what I'm figuring. A true bull market doesn't go much beyond 50% on a correction, so we'll see if that is in fact going to be the case. And when you lost your bullish embedded reading, that set up the target, and I said that to you, it's probably going to the 18-day average of closes to regroup. I still believe that completely. Rivian, it lost its bearish embedded reading. Now, when did it do so? Because this is important. Let's get together here, right here. So Thursday, it still was embedded. It lost it on Friday with that, and now you're getting a little bit of a pullback. So before this low is taken out, if this is a bullish market, price and the 18-day average should come together. So I am looking for that before the market gets back underneath the $10 level. We'll see if that actually happens in through here. In CrowdStrike, you got over the combination of the 200-day average and the 100 and the Bollinger Band, and the market stayed over that, and today you have a big outside data to the downside. Look for an immediate challenge is what I'm doing for these moving averages in the Bollinger Band and for the market to come back down, maybe even get back into the 290 to 300 level. We'll see. But I do think the market's overdone now. You would have to take out today's high to prove to me that there's more upside left in the market. Uranium rescued itself, and this is always what you want to look at. I teach this in my embedded course on Bollinger Bands and slow stochastic, called the Enhanced Bollinger Band course. It's at iraepstein.com under the word courses. You're embedded. You're bullish as can be. When you lose the embedded reading by this number closing under 79, the professional money comes out. The only time the market can re-embed is by getting another 3 days in a row or after the day it loses that reading, which is exactly what it did. The market came back over an 80 number in both parts. So this was called a bear trap, and from there, the market, let me come back here. Well, it tries to continue higher. We'll stay with Win, or can I get back there? Yeah. Let me come back 1 day here. I hit the wrong button. That's why you're climbing today. Got it? So, yes, this is the big support area. Yes, you had a false reading. Now, if the market loses that reading again, often you get the break, okay? It's rare that you do it, lose it, get it back, lose it, get it back, and just continue to go up. Very rare. Win Casinos, telling you that the Chinese move is still good, and so is the move in the Mideast, because Win is getting a lot of the money that they're getting now out of the Mideast and looking at China. They've got new casinos that's going to open in Abu Dhabi. When you look at, how do you gamble when you can't drink? Am I correct in that? I think it's Abu Dhabi. I don't know if you'll be able to drink in these casinos or not. Higher lows, higher highs, trying to move a bit higher at 155.92. I don't know if the house will have an advantage if they can't drink. But Toll Brothers came well off the lows. It's back in its uptrend. But remember what this is. This is your big money builder. The people that are coming to Toll Brothers aren't trying to do $400,000, $500,000 homes. They are into the million-plus homes that are being built. So it is the luxury of luxury. You've turned everything here. I think the market's going to be bought at 152.10 now with a $5 risk under 147.90, looking at least for 155.92 or higher. We'll see what happens. When you come here, you're still caught in the center of the whipsaws. You got down to the Bollinger Band. You might go to the upper band. This is similar to Toll Brothers in the chart action for sure, but not quite the quality because it's a mixture of a lot of builders. You've broken out of the sideways action here in the financial services. So for those of you that watch my updates in the morning when I do my morning vehicles, I was hoping this would take place, and it is. We'll see how far this market can carry now. XLI is trying to do the same thing. So you're getting the financial sector and the industrial sector moving out at this time of the year. The energy sector, I don't know that I'd want to play this when I'm watching what I just told you. I question if oil can stay up here. OPEC today came out and did a revised thinking. They're much more in line, I think it was, with the IEA, who disagreed with them on what the world demand for oil was going to be. And OPEC is now reversing course down, getting close to that part as to what they were. They did that today. Higher lows, higher highs, still bullish, but overbought. No, thank you. And in the gold market, I don't think it'll take very much. All you got to do is get over the highs of Friday, and the market turns into a new buy signal, looking for wherever the upper Bollinger Band is at this point. Another market that last week off the weekly charts threw out buy signals that my subscribers could go to. And win, lose, or draw, we went into that. Lower highs, lower lows, still bearish in silver, but you take out now 28.87, and just getting over that would turn me bullish the market with the stop under either at today's low or tomorrow's low before that's hit, but that would get it going. At this point, the bears have control though. In the copper market, the bears are still in control. You have to go back and take out now 46.97, just like in silver, to negate this. So the Western markets didn't give China the credence, but if you looked at copper in the Asian markets, it was well bid, so was rebar. So interesting how the markets are doing this. I think you're coming to the end of this break in the bonds and the notes. I'm looking for the 100-day average to be handling the market with the Bollinger Band. So it's embedded, but I'm looking for the big numbers, if you get down any further, to be short covering in a major fashion. In the dollar, just up and away. Now, I watched the pro betting sites for the presidency. I don't know if you do or not. But now it's, from some of them, Polly's got one where you are sitting with the Trump went up ahead, and the dollar's been rallying with that ever since it goes. Who knows what will happen? This is a horse race. I mean, anybody that thinks they know what's going on, you don't. I happen to live in Chicago, and here it's a Democratic city. If you're a Republican, your vote doesn't really count for anything in the city. It's just overwhelming Democratic. It's so Democratic they don't even run Trump ads here. And that's smart. It wouldn't get you any money for anything that you're running. So all you see are the Democratic ads, and they keep going with those. FXE, lower highs, lower lows, and as you can see, the market sitting here right now, well, still bearish. And I agree with the bearishness on this. Why? Because I think they're going to keep cutting interest rates. I think their value of their currency keeps falling with it initially until the bite of all that lower rates works itself into the economy and we start seeing the turn. So you put it all together, you try to come up with a game plan, and I have one for you. If you go to our website, under courses, you're going to learn on my full charting course how to use the swing lines, the moving averages, slow stochastics, my version, and we put it right in there for you, the Bollinger Band, and window envelopes. It's 45 different chapters. Each chapter has several different, some of them 8, 9 videos in them. So there's a lot of video time in this that walks you through everything. You also get 30 days to my full research, to my ETF subscriber videos, to my morning, to my written updates, the charting software, all the special reports, everything I have. Just go to iraepstein.com courses. You can also move your cursor up to the top here and you'll see an icon for it. I'm Ira. As you can see, I'm able to talk again. I hope it's tomorrow that I can do the same, and I'll talk to you tomorrow morning. Take care.